Good evening, ladies and gentlemen, and welcome to our first virtual event. I am Dirand, and with me today is Suzanne, Rochelle, and Deirdre. We form part of a very important investment team here at Blignaut BlueStar. Also joining us today is a very special guest all the way from the Western Cape, Wade Witboy, who is a portfolio manager for Glacier Sanlam. We meet with Wade on a quarterly basis to discuss important shifts in the market, and he gives us some advice to ensure that your investment perform optimally and safely. Before we start, please note that we are making a recording of this session, so that will be sent to you as soon as possible. Also, just keep some questions in mind that you have. At the end of the session, we will give you some further information in which you can communicate that to us. So, let's start this session. Over to you, Suzanne.
Thank you, Dirand, and good evening to everyone. The goal of this session is to add value by keeping you informed and explaining to you how and why we do what we do to ensure wealth creation and preservation. Now, as most of you know, our investment philosophy is significance through consistency. Here at Blignaut BlueStar, we are dedicated to ensure wealth creation through discipline and consistency. So without further ado, I'm going to share the camera today with Rochelle and Deirdre, who's going to chat to us about the topic asset allocation.
Thank you, Suzanne. So let's jump right into it. What is asset allocation? When asked by a waitress whether he would like his pizza cut into 6 or 8 slices, baseball legend Yogi Berra is reputed to have said, 6 please, I'm not hungry enough to eat 8. We believe how you slice the pie or pizza is the key to successful investing too. Asset allocation is ultimately an investment strategy which aims to balance risk and return. It is the process of deciding how much to invest in the various asset classes, whether it be cash, bonds, property, foreign assets, or equities. At the end of the day, without taking on any risk, it would not be possible to reach the desired returns. And although we cannot eliminate the volatility that comes with investing, it can be managed. So how do we determine the right mix for you? We look at your investment goal, your comfort level with typical market fluctuations, and of course, the investment term. When it comes to risk tolerance, some investors are perfectly comfortable with high swings in the financial markets, whereas others cannot tolerate such fluctuations, even over the short term. And this will directly influence your investment strategy. For many people, the most important long-term savings goal should be retirement, followed by perhaps saving for a child's tertiary education. But it's important to understand that your definition of a short and long-term goal will depend on your life stage. Another frequently asked question, which Deirdre will discuss further, is why the variety of fund managers in one portfolio? Thank you, Deirdre.
Thanks, Rochelle. So if there's one thing we have been reminded of in 2020 is that investing is certainly not a linear journey. While many investors may be familiar with asset classes, as mentioned by Rochelle, very few really understand the underlying investment styles that dictate how and why the investments are invested the way they are. An investment style refers to the process that determines how an asset manager manages money on behalf of investors, including how they would choose investments in their respective portfolios. Common styles include value, growth, and quality. Different styles of money management excel at different times as the financial market moves between cycles. This means that asset managers perform differently to one another at various stages of this cycle. And no single asset manager can constantly outperform at all stages of the financial cycle. So by utilizing the various styles of different asset managers within our portfolio, it enables us to reach a targeted performance while trying to minimize downside risk. Think of it as not putting all your bets on a single horse, or investment style in this case. Throughout this process, to determine the right combination of asset managers within our portfolios, we rely heavily on resources and expertise of experts. One such expert is our friend and colleague Wade, who makes our hands stronger when it comes to determining the best options available to you, our investors. So it's my pleasure to introduce Wade, all the way from the Western Cape. He's going to be our final speaker for the evening. So over to you, Wade.
And my volume is working, so I'll share my screen. Apologies for that little technical error. So once again, thank you for your time. By way of introduction, my name is Wade Witbooi, Portfolio Manager at Sanlam Multi-Managers or Glacier Invest, and I work in conjunction with the team at Blignaut BlueStar to try and get the best investment outcomes for your hard-saved capital. So my duty tonight is to touch on a little bit of what's happening in the economy and within financial markets. And as you know, these change on a daily basis, so I'll do my best in the limited time availed to me. So before we look forward, I just thought we'd look back slightly at the year that was 2020. We know it was a tumultuous one. I won't tell you why, I'm sure you know, but how it started is that first quarter last year actually started with a global shutdown. All economies and countries actually ground to an absolute halt. Both you and I were stuck at home trying to learn to bake banana bread. Some of us went to go buy pineapples for other reasons and trying to earn our discovery points running around in our garden. So it did teach us a lot through that period. However, the world has since begun to open up. Certain things were highlighted as well, like racial injustices, and these social protests became way more powerful. And this is even more evident if you see the Premier League football as an example, where these protests are still ongoing. So once again, it was highlighted the levels of inequality and injustice around us. Within the US, the last piece of the puzzle that was put together was the presidential elections, and thankfully it led to a Joe Biden victory. Although it was hotly contested and disputed, it actually ended up with President Trump being banned from social media for inciting an insurrection on the 6th of January and being impeached for a second time since. Thankfully, he's gone quietly into the distance, and President Biden and his administration has gone about their duties. And at the back end of last year, finally, some hope. There was a Vaccine Monday, as we call it, where Pfizer was first to market with their vaccine. And that was kind of this shift in global financial markets to where we are today, because we've seen more vaccines come online on board, distributions going well across the world. And that's kind of how 2020 ended, with this optimism after this tragedy we've been throughout the year. 2021, on the other hand, seems to be something out of a movie. So it seems like within financial markets specifically, the focus has shifted from COVID and fundamentals, etc., as the theme of, let's say, cryptocurrencies, meme stocks, and easy money has sought to take over. Recently, you would have seen a sharp decline in cryptocurrencies, primarily being Bitcoin, Ethereum, even something like Dogecoin, which started off as a joke, inevitably had to fall at some stage. So there's seeming to be less questions coming up around cryptocurrency because no one wants to own up to owning something that's fallen 50%. There's a trend in the US where there was a rise of SPACs, or special purpose acquisition companies, and because of all the stimulus, investors invested or allocated a lot of their money to these instruments. And we've also seen, after the mania, these investments falling between 30 and 40% after all of this mania. Headlines, once you see it in print media, it's probably the top of the cycle. And the New Yorker calls it, "Can I SPAC my stonks with NFTs?" Last year, I would have no idea what that means, but now, due to what's been going on, I actually have an idea, because SPACs are basically blank check companies raising money. Stonks are what retail investors call stocks, but they call them stonks because they only go up, because they enter the markets right at the bottom. And NFTs are non-fungible tokens, or digital assets, which you can buy based on the blockchain, things like art. And I actually saw an NFT of a virtual bicycle for sale, which costs way more than a physical bicycle. But again, I think it's a time of mania in markets. Another thing we've observed is wide ranges of outcomes over the past few months. So as previously mentioned, picking one fund manager or style that is going to outperform with certainty is incredibly difficult to do because their performance will be determined by a lot of risk factors which they consider and place positions for the future. If you know exactly what happens in the future, you'll always win. But the future is highly uncertain, and we don't have to look further than last year to see that. So the difference between the best performing funds and the worst performing funds is actually at its widest that we've ever observed. And this is evidenced by the grey line on your screen at the moment, whereby there's nearly a 45% performance difference between the funds who've done well and those who've done poorly. And naturally, our job as an investment committee is trying not to chase and always go and find these top performing managers, but we identify the ones that can consistently give us superior returns. From a markets perspective, these are numbers up until the end of May, so they are quite fresh. What I have highlighted are two sections, and please forgive my Backstreet Boys cartoon in the corner. The all-share index, the top highlighted red section, is basically SA equities, our fundamental or our primary building block to go and get returns. So this is basically the equity market in South Africa. And you can see over the past year, it's returned about 38%, which is a phenomenal return. Below that, also highlighted in red, is the global equity market converted to rands. So how would your money have performed if you sent it offshore over the past year, and what would you have achieved? And that would be about 9%. So that's also an incredible gap between global equity markets and what we've experienced as local investors. Another number I'll just highlight briefly is the top line. It's tagged the Steffi Composite ZAR. That's basically the return of cash or money market investments, currently at about 4% return. And we actually expect that number to start going lower as well, as cash rates are just so low. We'd rather prefer to keep investors in these sort of diversified asset classes that can meet those long-term objectives. When it comes to COVID, fortunately, in a large portion of the developed world, it seems to be becoming a thing of the past. So on the top left, you have infection rates across the European Union or the EU, and you can see the trend has been sharply lower. Within the US, it is the same. I read a stat the other day that this is the lowest infection rate since February last year. So they have done a phenomenal job to distribute vaccines and go back to normal. The UK is pretty much the same. The level of restrictions has been largely removed, and they are actually looking forward to a normal summer coming up in the next few months. While the emerging world, South Africa included, still seems to be struggling a little bit. I've highlighted India at the bottom right, who's gone through a massive wave of infections around the country. But fortunately, it looks like it's taken a turn and started to reduce. However, the infection rate in India, as an example, is still high, whereby the developed or the richer countries like the UK and the US has largely moved on from COVID. That brings us to the vaccine distributions. So the lines on your screen, it's basically the share of people or the percentage of people who've received at least one dose of the COVID-19 vaccine. And you can see Israel has been leading the way. The UK, the US, Germany, and the EU are slowly catching up after they've signed agreements with Pfizer recently. So by all measures, the developed world is starting to play catch up and look to make COVID-19 a thing of the past. In South Africa, however, we like to do things differently, and we still are in a battle with COVID. So the graph on your screen at the moment kind of just gives color to the waves we've experienced from the first wave, second, and on the right-hand side of your screen, it's the current COVID numbers in the country. And if you don't already, I suggest you follow Dr. Ridwan Suleiman on Twitter. He does give regular updates. And this is just a snip from one of his latest tweets. That you can see case numbers are high. They are increasing at a rapid rate, which is why we had a family meeting the other evening with our president. The positivity rate is also starting to increase. And you're also starting to hear anecdotally, and I speak on behalf of myself, people that or family members starting to once again fall ill with COVID. So this is definitely something that's way front of mind for SA investors. So Dr. Suleiman has also just plotted these three waves on top of each other. So the blue line is the first wave we experienced, where I think the maximum was just under 13,000 new cases. The red line was the wave we just exited at the back end of last year, in December, where new cases averaged, let's call it about 20,000 per day. And the black line is where we are now and the current trajectory. So according to these stats, it looks as if the trend from here is up in terms of COVID infections. So that's why I'll encourage you again to continue to be observant and cautious in your social interactions, because COVID is something that we'll still be dealing with in the failure of distributing vaccines around the country. So I've chosen one chart just to express how things are back to normal in the world. So this is the Bloomberg Economics Global GDP Growth Tracker. It aggregates global growth or activity around the world and as a percentage change year on year. You can see the two sharp declines in 2008 and 2020. That was the global financial crisis and the COVID lockdown respectively. But you can see a sharp V-shaped recovery in global activity, and GDP levels now, or economic activity, seems to be back and perhaps beyond where it was before COVID-19 struck around the world. So financial markets and economic activity seems to have largely moved on from COVID-19. This is a framework we use at Blignaut BlueStar to assess asset classes as in terms of equities, bonds, property, whether it's local or offshore, and where we prefer to invest based on our fundamental research. And what I would like to highlight is that running from top to bottom is the asset classes, and from left to right being our preferred positions in portfolios from a -2 to a +2 relative to our respective benchmarks. Our preferred asset class with a +2 at this stage is still global equities, in both developed as well as emerging markets. We prefer exposure to South African equities as well as South African bonds. And we're trying as best possible to avoid investments in SA cash, purely because the expected return is so low, you'll actually be left behind when you adjust for inflation. So we just do not think it's a reasonable investment at this stage. One tactical move we are doing is starting to increase our offshore exposure, which I'll chat to in a little bit as well. So when it comes to asset allocation, I know the team at Blignaut have given you some information, but I thought I'll give a spin on it as well. So when they sit down with you and develop your financial plan and how you're going to get to your long-term objectives, it's basically like a coach picking his team and going into the next match. The next match being the challenge, the objective, and the team being the players on the field, how we're going to get these returns. So this is just a snip of, and you can see my bias on Man United's 1999 treble winning team on the field. So as financial planners, their role as a coach is to get the strategy right. So that's strategic asset allocation. What we also do is tactical asset allocation, which we also believe is important. And this I kind of equate to the coach running down to the side of the field and spotting something on the field that they can actually take advantage of, whether it's to play the ball more down the left or the right, or letting the defenders step up, or actually changing a little bit of tactics as the game goes on. This is the kind of tactical asset allocation we do within our Blignaut Investment Committee to enhance your returns as best possible, while also managing the risks within your portfolio. So looking at the asset classes and asset allocation, broadly speaking, this is a graph over the last 10 years of returns. Going from top to bottom, the yellow line that has largely led the way has been global equities. Now, I know there have been a lot of people saying, just take your money out of South Africa, invest it offshore because it's the best place to be. And here's with perfect hindsight, 10 years ago, that would have been the right decision. But I'll illustrate briefly how that's not always the case. The blue line in South Africa, as you can see, it's grown your wealth from 100 Rand to about 250 Rand, or just shy of 300 Rand actually over the past 10 years, which is a reasonable outcome. The red line that you see is inflation. So that actually is our biggest enemy as investors. So the bulk of the asset classes have actually been able to outperform inflation, with the exception of property, being that purple line, which is actually one of the worst performers over the past 10 years. Now, what I've done is I've taken the same asset class as you see, but instead of taking a 10-year period, I've just said, let's go back to the past 20 years. And you can see immediately how quickly things change. Property, which was the worst performer over the past 10 years, has suddenly become the best over the past 20. So it's made phenomenal returns. The blue line being SA equities was your next best performer. Inflation is your red line, which all of them have come up from. And the yellow line of being global equities, which you see is actually now one of the weakest performers. So the long term, which at 20 years is a reasonable long period of time, starts to tell you this important thing about diversification and asset allocation. So not putting all your eggs in one basket. Because the next graph I've used just shows you the drawdowns or the losses within investments over the past 20 years. And I'd highlight again the global equity market, which is the yellow line. You can see there's been periods of sharp drawdowns in the past 20 years, losing in excess of 50% of investor capital over short periods of time. You can see there was a period of about 10 years without a single percentage of return for SA investors who have gone offshore. And then, as I've illustrated as well, the subsequent 10 years turned around and investors actually started to outperform. Similarly, with SA property, it was the top performer over the past 20 years, but recently it has had a significant drawdown. So none of these investments are without risk, which is why we believe in blending these and not just taking a view as if to say, get your money all offshore because South Africa is no place to invest. So the rand is always a topical discussion point, and I've taken a graph from the 1980s. So the blue line is the rand-dollar exchange rate over time, and the red line that you'll see is what we call a fair value or purchasing power parity. And that is the mathematical calculation of where fair value should be over time, and the blue line is how the market prices it every day based on emotion. So the graph trend is from the bottom left to the top right, so you can see over in the fullness of time, the rand should weaken to the dollar, but it does come with some big swings. You can see in the emerging market crisis, the rand weakened significantly. In the global financial crisis, the rand weakened, it did the same, but it took you 13 years just to get back to those extreme valuations after markets came back. Markets weakened, or the rand weakened again after our finance ministers first learned to play musical chairs, and the weekend special minister subsequently was removed. So COVID-19 forced the rand weaker again to 19 to the US dollar. And I see on my screen this evening, it's closer to 13 rand 50. So significantly stronger than it was before COVID came along as well. So trying to actually have a rational view on these things is what we try to do. And as you can see on the screen, we think the rand is actually below where it should be. So that's why we're taking this opportunity to say maybe now's a good time to start allocating a little bit more offshore and take a long-term view, because the currency has given us a fair entry point. So that's kind of just been a round-trip view of investments and risk. And I always like to end with this quote by Benjamin Graham. And he says, successful investing is about managing risk, not avoiding it. Because without risk, there is no excess return. And fortunately, as investors, we've got time on our side, so we can assume the risk, manage them in the shorter term, and enjoy the benefits in the longer term. And with the team at Blignaut BlueStar, I'm sure you will continue to achieve your investment goals in the long term. So once again, I'd just like to thank you for your time. Thank you to the team at Blignaut for the opportunity, and enjoy your evening further. Thank you.
Thank you very much for your time, Wade, and your valuable insights. We really appreciate it. And I think I speak on behalf of everyone here. We are not very appreciative of the weather you have sent us, but you are forgiven. We really appreciate the vital role you play in our team. And then a big thank you to the clients that have joined this evening. We trust that we have provided value. If you have any questions, please feel free to forward them to the address that will be provided on this final slide. And that's it from us. Please look after yourselves and enjoy the rest of your evening. Until next time, goodbye.